I'm pleased to present Troilus Gold to you this afternoon. The title, "A New Life for the former Troilus Gold Mine," I think is well deserved. Standard cautionary statements, and we'll move through. What was Troilus? Troilus was discovered in '86 and '87, put into production in 1996, and during a 14-year period, it produced 2 million ounces of gold and 70,000 tons of copper for Inmet. Inmet was taken over by First Quantum, predominantly for its global base metal assets, and predominantly Cobre Panama. And Troilus was nearing the end of its mine life. And very limited capital had been invested into the mine over its life. As such, they just shut it down. At that time, Canadian gold was not in favor. Investors were focusing on Malartic, on Detour, and other advancing assets. And Troilus was kind of forgotten about. We had 2 million ounces at 1.6 grams underground, analogous to an Agnico Goldex. Raised $25 million and took a good look at the exploration potential of the property. Jump forward to today. In just 24 months, we've drilled almost 80,000 meters. We've taken the resource from 2 million ounces underground to 6.4 million ounces, where the majority of those ounces are open pit, within a permitted mining lease and having over $400 million in infrastructure that I'll walk you through. There's a picture of the mine. The majority of the production came from Z87, which is about 350 meters deep, and the J4 pit, which had about 120 meters depth. We have 88 million shares out. We have $50 million in the bank, having just completed a financing in February. We're well covered by the street, including Red Cloud, and right now we're about a $72 million market cap. We're well positioned for the impact of COVID, though things look like they're opening up, as Jose mentioned. We have yet to see real guidance on the exploration side, and we're positioned well as we move forward. We're engaged with our shareholders and our stakeholders. Our site is on care and maintenance, but well maintained. Our staff is all working remotely, but luckily with the financing complete and with 6,000 meters of drilling completed in January and February, we are really well positioned to continue driving our project forward, to delight the market volatility, and we're prepared to get right back to work the moment that we can. We are 80% institutionally held. Insiders and management, including myself and our senior management team, own 10% of the company. We bought every share in the market, and we participate on all of our deals. We're extremely proud of our Quebec ownership, predominantly the case, FTQ, Sidex, the James Bay Investment Board. Chibougamau Drillers are great shareholders for us too, and the rest are global funds. So we're well supported by the institutional world. We're about 10% held by retail, and that's growing. So we're in a low-risk jurisdiction. I'm not going to spend any time on why Quebec's great. We know the deposit is growing. In just 24 months, we've added 4.5 million ounces of economic ounces. All the major infrastructure, with the exception of a mill, is in place. That's going to have an impact, a positive impact on the valuation and the return to our shareholders. We are adding ounces as we drill. We are adding ounces faster than we can imagine. We have a team in place to deliver this project to our shareholders, and our stakeholders have been there to support us the whole way. Where we're located, we all know the Abitibi. We're located in the Fred Evans Greenstone Belt, about 250 kilometers north of the Abitibi. The main difference between the Abitibi and the Fred Evans Belt: same rocks. We're slightly higher metamorphic grade, same age. Fact is, we're buried under 8 to 10 meters of till where the Abitibi is exposed. So the lack of production and the lack of mines in the Fred Evans Belt has really been a function of exploration. For every 5,000 meters drilled in the Abitibi, there's probably been one in the Ferret Belt. So certainly now we're a major focus of provincial and national exploration, and the majority of majors are exploring around us. Accessibility is great. Come to Chibougamau. We are an hour and a half drive on a road on Rue Nord, and then in off of the old Hull Road, which is production ready to site. Chibougamau is a town of over 3,500 people and has everything that we need and supports many major mining operations. Our property, we have 16,000 hectares. Originally, we started with just the J zone and Z87 and the ground to the southwest of on a mining lease. We acquired the rest of the property through consolidation last year, which included a deal with Jose, which helped us consolidate some of the key ground to the northeast. We have over 20 kilometers of unexplored trend to the north, and we're excited to get there very shortly. A major point of differentiation for us before I get into the deposit is our infrastructure. We have 40 kilometers of production-ready road into site. That costs $1.5 million a kilometer to build. That's our market cap. Everything else I'll talk about is free. Hydro-Quebec has just upgraded our entire sole-use power line to site. That's about $750,000 a kilometer to build. We have a 50-megawatt substation in place capable of running up to a 30,000-ton-a-day mill and a 700-man camp, and construction camp all included. We have a 60-man camp in place. We have sewer, septic, water for not only that camp, but ultimately an operational camp. We have offices, core storage. Underneath those pictures is 6.5 square kilometers of permitted tailings. If you assume 20,000 ton a day operation and conventional tails, we have about 6 years of capacity without having to do a lift. And then you can see the pits in the distance. The earthworks are completed. We're now getting to the point where we'll be permitted to dewater, hopefully this spring. All of that on this slide, depending on where you want to throw your dart, is probably worth between $300 and $350 million. When assuming a capex to build a new mine from scratch, that's going to have a material impact on the economics going forward. Here's our growth: 80,000 meters of drilling, 6.4 million ounces. This is a lower grade bulk tonnage deposit, typically mined at around a gram historically, and I think we'll show you that the similar persists. However, we are finding significant higher grades, which are going to add to the economics going forward. That's what we inherited, and that's where we are now in our 2 years of work. The J5 pit in 2016 had about 200,000 ounces underneath, and the J4 underneath the old pit. And there was about 2 million ounces underneath the Z87 deposit. The underground is important. It's 50 meters wide. It's 1.2 kilometer strike length. It's a very homogeneous deposit, quite analogous to Goldex. And then in 2019, that's 6.4 million ounces. We've extended the mineralization Z87 down to 800 meters. We've stopped drilling. As Jose mentioned, these deposits tend to increase in size as you go in depth. We're seeing the same. We've extended Z87 south off of the pit at surface 600 meters, and J4 has a whittle shell that's pushing down to 500 meters right now. What that gives us is a very significant open pit scenario from multiple production sources and an underground capable of adding grade as we move to production. That's the distribution of our drilling. You can see the majority has been focused on the active mining lease. Take a look to the right side of the page. That's 3.5 kilometers away. That's the southwest zone. That's a discovery we announced in January and put out some results yesterday as well. And that is absolutely turning into something special that could be another production source for us as we continue our work. This is a 0.3 cutoff. This is a cross section of our resource and Whittle shells at a 0.3 cutoff for gold for the open pit and 0.9 for the underground. That's 6.4 million ounces. The ore body is incredibly consistent. The strip is very low. I'll just really focus on the Z87 South area as you push off the southwest off of the main pit. The white you see on that cross section is not a function of no ore, no mineralization. It's a function that we haven't drilled there yet. We've only been a company for 2 years and we're just getting to it. This is a 1 gram ore body and a 1.8 gram ore body in the underground that we're showing you. If we were changed the cutoff to 0.9, you would still see 2 million ounces in the open pit at 1.5 grams. And if you went to a 1.2 gram cutoff on the underground, you'd have a 2 gram ore body. So we have a lot of flexibility with the grade depending on the gold environment. But certainly in a $1,700 gold environment, you're taking everything. Geological map, the majority of the mineralization is hosted or proximal to the brecciated zones within the Troilus diorite. What we found is that the mineralization is not stratigraphically or lithologically constrained, it's structurally constrained and in place. And as such, we've put a new model on the deposit, and this model has resulted in 4.5 million ounces of discovery in 2 years. The southwest zone is our first application of these new models away from the main mine, and we'll talk about the significance of those shortly. I throw this up just to show you that it's not that Inmet did poor work. The fact is Inmet didn't do any work. It wasn't a corporate directive for them. They were not focused on expanding Troilus. Their corporate objectives were elsewhere. We were told there was nothing under the J4 pit, and you can see the V on the left-hand side is the old J4 pit. We're told there's nothing underneath. Well, immediately below the pit, we hit 1.3 grams over 64 meters, and the ore body continues at depth. It's a very robust system, and as we drill, we add more. And the underground, like I said, we have 2 million ounces at 1.8 grams at a 0.9 cutoff. This is significant. The ore body is wide, is consistent, is homogeneous. At the end of the mine life, the superintendent put in a $7 million, 450 meter ramp into that ore body. So a lot of investors don't like low-grade bulk tonnage underground deposits. Goldex is an incredibly profitable mine. What I would say to that is 350 meters of pre-strip is done, and the ramp's in. So in any production scenario, we can bring 2 gram plus material out, blend it with lower grade 1 gram-ish ore, and supplement production. We with 6.5 million ounces, we have a very long life ahead of us. Let's go down the southwest. We drilled it in December the first time at our discovery hole. In hole 177, we intersected 2.87 grams over 17 meters, including 2.26 over 24. That immediately focused. Those intersections were all less than 150 meters depth from surface. We went in, we've just completed 6,000 meters. We put our first batch of results to the market yesterday, and we announced 1.6 grams over 33 meters, including 2.3 over 8 and 3.8 over 7. And there's a 7 gram over a meter in there, all less than 75 meters from surface. What originally we considered to be a 500 meter strike length, the drilling that we've completed has now stretched this zone out over 1 kilometer. And to put that in perspective, the strike length of the southwest zone and the mineralization we've identified is the same strike length as Z87 to the northeast. Very shallow, higher grade, looks a lot like Z87 to us. And just to follow up on that, The southwest zone, we've really broken up into two zones, the west zone and the main zone, you can see on the left. And our geological model has really shown that the J zone and ZA7 are two opposite sides of a syncline, a deformed syncline, and that the limbs of these folds extend all the way to the south. So 3.5 kilometers away, the southwest zone, which we're hitting now, looks a lot like Z87. The tenure of mineralization appears to look similar as we come off the edge of the pit, and it's wide open. The 3.5 kilometers provides a lot of exploration opportunity as we move forward, all within the infrastructure of the mine, all within the ability to use a centralized processing facility. It's on this ore body, and this discovery is on the road. Here's a picture, a cross section of what it looks like, a section. Very homogeneous. The hole 184 that we released yesterday. Again, notice the 100-meter depth level. That is a great ore body, or a great intersection with quite high grades, very shallow. And we see it to be very homogeneous. We expect more to continue. There is a high-grade trend at Troilus that was never really realized. Our drilling over the last 2 years has had some huge success. In the J zone, we've drilled over 4 grams over 20 meters, 6 meters of 11 grams. We had 42 grams over 2 meters, 7 meters of 20. I won't read all the numbers, but the significance here is that this is not a stratigraphically controlled deposit, it's a structurally controlled deposit. There is a broad-based, low-grade gold halo that's running around a gram. There is a secondary, remobilized, higher-grade gold system associated with perpendicular fluid flow to the main trend. And the most important thing to us is that it's identifiable, it's predictable now, and we can replicate it section after section. So when you move into a production scenario and we start building a mine plan around these pits, we're going to be able to maximize it. I don't usually put in valuation slides with competitors, but our work today showed that Jose and I are both exactly equally valued on an EV to gold equivalent and on a price to NAV based on consensus. So this isn't just for Troilus, this is for O3 too. I think both presentations hopefully has shown that of all the exploration companies in Quebec, Troilus and O3 probably have the most upside on different sides of the province to upside through the drill bit, and we're probably the 2 best capitalized companies as well. What you're going to see from us, we've completed our EIA, small EIA on dewatering. We've done all the sampling. We've submitted our permit. We've had our first questions back, and we've sent those answers in. We've bought a water treatment plant from Eleanor. We've installed it. We've ran 2 kilometers of power to the site. We expect to be dewatering those pits starting in the spring. We are working towards a PEA, which we hope to have out this summer. It's going to incorporate a production scenario from Z87 and J4, and we'll see what we'll certainly see what the Southwest brings in. We have another 12 to 13 holes from the Southwest to come out over the next few months or a few weeks, and that will culminate in a new resource as well. And I think you're going to see continued growth. The team is in place to do it. I'm certainly going to highlight our Senior VP Exploration, Blake Highlands, and his technical team, who've added the 4.5 million ounces. Ian Pritchard is leading our engineering charge, and Jacqueline Leroux is making sure that all of our permitting is well underway. We have a great team who works really well together, and it's a pleasure to work with them. And just the board, then I'll wrap it up. We have a great team. Andrew Cheadle was the GM at Musselwhite for 10 years. Dr. John Hedegario is the chair of Lassonde School of Mines. His consultancy is also the head of the External Technical Review Committee for Malartic and for Laurent. Eric Lamontagne engineered and constructed Melody and Meadowbank for Agnico. He's running the Greenstone JV right now for Centerra and Premier. And more importantly, he was the last superintendent at Troilus and brings that historic knowledge to us and has been a huge help to us. So we have a really experienced board going forward. And that's it. Thanks very much.